In this episode of Forex Trading Live, what I'm going to show you here is my interesting technique and strategy on trading the euro. Okay? What I'm going to show you is how to wait for the starting point of a trend, just like this, and I'm going to show you how we nailed 140 pips without using any indicators whatsoever trading the euro. All right, let's do it. Alright, what's up traders? It's Mark here at Dino Trading. Hope you're doing well. I haven't done one of these Forex videos in quite a while, so I wanted to do something special for my Forex traders out there and show you my interesting strategy that I've been using pretty consistently and very effectively on the euro. Okay, believe it or not, the euro has always had a reputation for being one of the slower moving pairs, but the last few months, the volatility has really skyrocketed in the Forex markets. For those of you guys that consistently trade Forex, you know what I'm talking about. Instead of having an average daily range of 40 to 50 pips, we're clocking in now at like 200 to 300 pips, right? It's a huge transformation in the Forex markets, which is beneficial to anybody who trades Forex. So let's get down to business here. First thing we're going to do, we're going to take this bullcrap candlestick chart right here, and with one click of our mouse, we're going to make the chart look like this. Okay? Nice, clean, organized price action charts, no indicators whatsoever. And what I'm going to be showing you here today, guys, is how I handle chop. Right? That's probably one of the most popular questions that I get asked is, you know, hey Mark, how do you deal with chop in the market? And the reality is you just got to trade through it, right? I'm going to show you how I do it very effectively, but consolidation, which is another word for chop, is part of any market, whether you trade Forex, futures, stocks. There's always going to be periods where the market trends, and then there's always going to be periods where the market stops trending and just chops around and goes nowhere. And you're just sitting around waiting for the next trend to start, right? So when I say chop, I'm looking at something like this, right? Where you get a green signal bar followed very quickly by a red signal bar. So what do you do? How do you handle something like this? How do you avoid getting stopped out repeatedly, right? Well, let me tell you what I do. Okay, the first thing that I do is I take these two signals, okay, these notifications, which is the long signal right here and the short signal right here, and I pop it into my T-bar chart, which is the smaller time frame chart. And watch this, guys, all right? I'm going to show you how to use pivot points and trend lines to stay out of this chop while staying in this giant 140 pip winner. All right, so let's jump over to the T-bar chart. Let's get going here. These two lines here, all right, in case you're wondering what this green stripe represents and what this red stripe represents, right? What that represents is the dyno signal bars, okay? This is the green, which is this green right here, and then this is the red, which is this red right here. Makes sense? All right. So what I've been doing pretty frequently is trading off of conservative pivot points, okay? And the software is going to do all of this for you, all right? You don't have to sit around and figure out what's an aggressive pivot point, what's a conservative one. It's going to figure it out for you, all right? Watch this. I right-click on the chart, and I load up my automated trend lines, okay? So I'm going to pop that onto my T-bar chart right here. Just stand by and give it a few seconds to calculate, and you can see it's going to draw pivot point dots inside the chart, right? Now, typically what traders will do is connect a sequence of two falling dots, which is two falling pivot points just like this with a downward sloping trend line, and you're waiting for price to smash through above the trend line. Right? This right here is an aggressive way to draw trend lines. There's nothing wrong with it, okay? It's actually quite a good way to draw any trend line and catch the bottom. But what I've been doing is I've been waiting for a sequence of three, right? I've been waiting for something like this, okay? So it's got to have 1, 2, 3 pivot points in this exact sequence. And what does this mean? What this means is we're waiting for price to stop trending down and start trending up, right? If we look at the actual pivot points, let's really zoom in here, all right? So stay with me here, okay? So here's a falling pivot, falling, 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 rising right over here, okay? So now this sequence right here meets our pattern of, where'd it go? Scroll over a little bit. This, right? Let's bring this a little bit closer, right? So this sequence of 3 pivot points is not the same, obviously, as this sequence of 2 pivot points, okay? And guys, this is just simply a different method. I have given this a name of being a little bit more conservative with your trading versus being aggressive, okay? So there's times to be aggressive, but there's also a lot more times to be conservative. And this pattern here of waiting until an uptrend has started before you draw your trend line has been working out really well for me, okay? So let me show you what I mean, right? When you get this pattern of 3 dots, you connect it like this, right? Now that didn't go anywhere, but check this out. Here's the next pattern of 3 dots. 1, 2, 3, right there, right? So you connect it just like that. You can see that the trend line breaks right over here. The stop would go here, 1 tick or 1 pip below the previous swing high. And this trade actually runs for a little bit, right? It runs for a little bit of a winner, enough at least to get you to break even without being stopped out, right? Now you eventually get stopped out because there's a red signal that prints itself right here. So don't worry, I'm going to show you the short signal and how we nail the sell-off. But do you guys get what I'm describing here? Is this making sense? Can you see how we stayed out of drawing so many trend lines, right? If we were drawing them with just the 2 dots, well, here's one, then here's one, then here's one, then here's one, then here's one, right? Like there's just a lot of trend lines to be drawn whenever you go with 2 pivot points instead of 3. Does this make sense? Are you guys getting this? I hope you are, okay? So now, moment of truth. Let's go back to the Dino Bars chart. What happened now on this short signal? Did we get the same pattern of 3 dots? And if so, how is the trend line being drawn? Well, let's take a look. All right, let's go back to the T-bar chart. This is the red stripe, which means now we're looking for what? Short signals, right? So we have to remove the automated trend line long. You just hit the remove button just like this, and you pop in the shorts, right? And now you flip it to conservative mode just like this. You draw your trend lines. Let's see what happens, right? So now you get the pivot point dots on the bottom of the bars, okay? So now again, we're looking for what? We're looking for a sequence of 3 dots that have to look like this. Here, let me draw these for you. It has to look like this, right? It's not enough for it to look like this, just connecting 2 trend lines. Now I want to see 3 of them, because what this tells me is that if the market's going up, okay, when I get this 3rd dot, it tells me that the market's getting a little weak, right? And I want to short it only when the market gets weak. I don't want to short a strong rising market. Does that make sense? Okay. So let's take a look and see. I'm going to let you guys stare at this. Can you guys tell me if you see any sequence of 3 dots that looks exactly like this? Go ahead and tell me. All right, hope you're able to manage it. How about 1, 2, 3, right? So there's a sequence where 3 dots printed. This 3rd dot tells me that the market's getting a little weak, and now and only now I want to look for a low risk setup to short the euro and sell this currency pair. All right, so let's just go ahead and draw our trend line just like that. You can see that the trend line breaks in this section right over here, and our stop gets placed 1 tick above the most recent swing high. Does that make sense, right? And let's just squish this in, see how this trade played out. You can see how it played out, right? A gigantic 140 pip winner on the euro, okay, using nothing more than a sequence of proprietary price action based charts, which is a higher time frame Dino Bars chart and a smaller time frame T-bar charts, right? And all we did was connect pivot point dots. We didn't do anything else, right? And we certainly did not use any garbage indicators like Bollinger Bands or stochastics or any of this garbage, right? If you want to successfully trade Forex and you want to trade the euro currency pair, then guys, this is how you do it. All right, listen, thanks for watching this video. If you have any questions on how to get my proprietary charts, contact me and let me know. And guys, as always, I'll see you on the next trade.